Hey, welcome to the 40 Finance Channel, investors. My name's Jeff Beers. Today I'm going to do a 2021 travel stock preview, if you will. Going to take the pulse of the travel industry right now as we're making the assumption that over summer into fall and winter, that travel restrictions will be pared back and that the pandemic will be under control. And we're just going to think out loud a little bit about travel stocks in general. Is now the time to get in? Should you wait for better prices? I'll give you my opinion anyway as we go through this. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before jumping on any stock. And of course, if you'd like stock market analysis like this, please do me a favor, give this video a like, subscribe to the channel, tell your friends. It really means a lot. Thank you to everyone for your support so far. All right, the first thing that I'm going to kick off with as far as travel stocks is just a couple of tips about this industry to think about while you're making your investments. And the first one is to go deep into travel. And what I mean by that is, you know, the airlines get all the headlines. Cruise line stocks get a lot of headlines. They're massive stocks with huge followings. But just understand that travel is a very, very big world. And if we think about consumers and recreational travel, the world gets even bigger. So from my perspective, the best places to play are almost at the top of the funnel, if you will, when you think about the Expedias and the Booking Holdings. We'll do a quick review of them today. But in addition to the booking sites, you also have these kind of parallel industries that could be where you find the best deals. If you want to think about restaurant chains, if you want to think about technology that supports the travel industry, and I have one of those stocks for you here today. Then you go even further out and you think about the event industry and potentially concerts and venues and things like that. So there's a lot of angles to this. Don't just get stuck on airlines and cruise ships. Not that those aren't bad rebound plays over the long term, but don't forget that both of those industries are very saddled with debt right now because they obviously went through a difficult year last year. And I'll say you're going to be stretched to find a travel stock that doesn't have lingering debt right now, but I can promise you that the airlines and the cruise lines are at the forefront of carrying debt loads. Hotels are pretty much in there as well. And lastly, if you want to make probably the easiest play on travel, events, venues, you name it, coming back online, then you'd certainly have to think about Google and their advertising arm. How much money was lost for them last year in terms of travel advertising, you know, weddings, events, concerts, how many dollars were lost on advertisements that never ran. So if you don't want to get into figuring out who's going to get the most bookings and you want to just go straight to the person who's almost for sure going to get paid at the top level, that would probably be Google in my opinion, followed closely by Facebook after that, because certainly advertisers for vacations and whatnot are going to use Facebook as well to get back in the game. So think about those two stocks as plays that probably have a limited downside risk, but offer you a chance to get a percentage play of the travel rebound. All right, one cool thing that came out of the coronavirus was that the TSA started sharing to the public passenger throughput information for the airlines and other spots that the TSA monitors the inflow and outflow of travelers. So right now online, if you go to the TSA website, which is tsa.gov, you can also just search in Google and just do whatever, like TSA volume statistics or TSA checkpoint travel numbers, something like that. But this is really awesome information if you're trying to get a feel for how far back we are in a rebound for travel. And if we look at the last couple posted dates on 2/18, you had 900,000 travelers. In 2020, you had 2.4 million travelers or so. 2019 was 2.1. Now we're inching into crazy territory on February 18th because I don't know when all the travel bans went in place. But regardless of that, it's fairly obvious that we are, a little bit less than 50% back on standard volume. And if we scroll down a little bit, this goes on forever, but I wanted to take a look at Christmas. Don't forget that Christmas was in 2020, so you're not going to have anything here. Let's see, when people were coming home, right, which is going to be like the 27th, 8th, and 9th, something like that. In 2019, we had 2.1 million travelers on 12/30. This year we had 1.1 million. So over the past 60 days or so, we are about 50% back from the average daily volume. And just to put that into perspective, I just went way back to May 31st of 2020. In 19, we had 2.5 million travelers on that date. This past year in 2020, we had 300,000. So back on May 31st, we were like 15% or something like that off the top of my head of the total volume of 2019. So we are definitely inching back. It certainly wouldn't surprise me to see travel back to 75 percentile, potentially even more, as we inch closer to the 4th of July. Okay, so we have pretty hardcore evidence that travel is bouncing back to about the 50% level. We're also in wintertime, right? So it's not necessarily peak travel season. So as stock market investors, you kind of ask yourself like, hey, people were piling into these travel stocks back in March of 2020 to kind of buy the bottom, if you will. Is there any other opportunity left? And the answer, in my opinion, is yes. The prices are not as attractive if you took that risk back in March of 2020. And let's face it, if you buy a travel stock today, you don't need it to turn around plus 50% in the next, 3 months, right? If you will hold long, then you will likely inherit the benefits as long as you choose a company that's on a good foundation. So I'm going to go through a couple of my picks. No airlines, no cruise ships. Let's go to the top of the ladder, and I'll show you what I'm tracking from my perspective. All right, first stock here is one I've talked about before. This is Sabre Corporation, SABR, and they basically provide the technology behind all of the booking services across the travel industry, whether you're talking about hotels, airlines. They even work with Google to power some of their listings. So this is a mix of a technology company that partners with a lot of other travel companies. You look at the 1-year chart and it's crazy because you could have bought this one for $3, way back on St. Patrick's Day last year. And you can see that it's run up. Now this company has been losing money like so many others over the past 12 months. They do have a debt load that is worth looking at. However, I can tell you, because this is a stock that I own, that they have managed to push off most of that debt load until 2023. So there's not a lot of concern there. But the way Sabre makes money is completely off travel volume. So that TSA checkpoint data that we were looking at, that's basically, that might as well be the earnings report. So this is a stock that sits right at the inflow of travel in general, which is exactly where I like to be. I don't want to try to figure out if you are going to take a cruise or stay at a hotel or do whatever. More than likely, you'll come across Sabre in your journey regardless of where you go. Just as a quick note, if you're interested in Sabre, back in February, this was a $22 stock before the crash. Let me see the 5-year chart. You had about 23 or so in 2019. My 2 cents on this one is it's probably about a $20 stock. So depending on what your goals are, if you want to make a quick 25%, to $20, you could probably do that with Sabre before the end of 2021. If you need more, than that, then, just don't expect this one to go to $100. It's not going to happen. All right, my next favorite company in the travel space is Expedia. I do not own Expedia stock. I kicked it around 1,000 times last year when it was on this roller coaster ride, down in 60s. And it just kept running up faster, like everything else in the market. It kept running up faster than I thought was reasonable, right? This was formerly a profitable company that's now down to, minus $19 EPS over the past 12 months. And if we look ahead to like their analysis, next year, at this point next year in 2022, they might finish with $5.59 as an EPS. And if that's the case, you're looking at a forward PE of about 40 today. It's not unfair, and I like the way that travel is bouncing back. For me, I would be more inclined to get to Expedia, somewhere in the 130 mark. I don't think that they are going to be short of volatility coming across the next couple months. I think the market, as a general rule, is going to have more volatility. So I'm keeping my eye on it. But I do want to add that I think this one is run up too high. All right, next up is Booking Holdings. And what's impressive about Booking Holdings is, through this whole thing, they have managed to continue to have profits, right? So you do have a trailing 12 months EPS of $33. That puts your P ratio at 68 today. And when we look at Booking Holdings' 1-year chart, last year they were at 2,000. Right now they're at 2290. And I would say with Booking Holdings, there's still some opportunity here. Maybe not today when it's running at 2,300, but when I look back to January 25th, and they dipped to 1944, that's a $350 savings. So maybe you capitalize on a red day in the market. And to me, Booking Holdings has some opportunity. Looking at the analysis tab, Booking Holdings has an EPS projection from analysts, 5609. Doesn't look like they've reported in 2020 yet. Let me double check. Oh, okay, you got February 24th for their 2020 earnings report. So if they did hit 5609, whatever, that's roughly a PE of 40. So similar to Expedia, except remember, Expedia's forward PE that I threw out there in the 40s, that was actually for 2022. So Booking Holdings looking like, from a fundamental standpoint, they would be the better play, strictly on fundamentals. If Expedia has any advantage, though, it would be that they own VRBO, which is Vacation Rentals by Owner, which is essentially an Airbnb competitor that they've owned for quite some time. So I would give the nod to Expedia in that particular world, but from a today's price standpoint, I would nod over to Booking Holdings. And speaking of VRBO, taking a look here at Airbnb, which of course made its IPO debut sometime around December 7th. That stock has went up from 139 and it currently sits at 201. Looks like they have an earnings date of February 25th. And Airbnb is going to be sort of your mystery stock, right? We don't really know where this thing's going to go in terms of growing revenue over the next couple years. Checking on the analysis tab, we don't have any EPS data. We know they're not profitable, right? We don't have EPS data from 2020. This year, analysts have them looking at a $13 loss per share. However, they project only, basically less than a $2 loss the year after that. And if you scroll down to revenue, you have a 37% increase projected for 2021 revenue. The hard part, though, is Airbnb came out in the pandemic, right? So it's really hard to tie these numbers back to any sort of projected earnings base because 2020 you basically throw out the window. And even next year in 21, you're going to have a tough time figuring out where Airbnb sits because you won't have 100% travel across 12 full months. So it is a gamble. I think all you can do if you're interested in Airbnb, which I kind of sort of am, is just go through your gut. Maybe you sit through this earnings presentation on February 25th. More than likely, they're going to come out and say things are getting better, but they're still not good. And hopefully get a dip off that. I also recommend going back and looking at their IPO presentation, right? Airbnb is certainly intriguing, and it fits well within my model of getting closer to the top of the funnel. Because if you think about these kind of rental properties, it doesn't matter if you're flying to a vacation or you're driving or you're in a different country, right? They have the opportunity to make a sale for almost every traveler. All right, guys, so that's a look at the travel companies that I follow. Again, my methodology is just to get much closer to the travel activity, so the sort of for sure travel activity. And because I'm focused on that portion of things, it eliminates, for me anyway, some of the like Hilton hotels, Marriott, airlines, things like that. Doesn't mean that those stocks won't be good. This is just how I choose to play the game. And if you haven't invested in travel yet, I suggest to think about that strategy, because we don't know for sure where people are going to kind of matriculate into travel, certainly not in 2021. And then once we get some data back in 2021, we can start to see where people are going and which industries are actually going to recover versus which ones may not as much, right? So let's just say restaurants that have been hanging on for dear life waiting for the summer season, some of them are going to get picked off anyway, right? Because they took out too much debt and they maybe didn't get the volume that they were anticipating out of summer 2021. So just be careful which direction you choose. Study, read the reports, make the best selection for your investing goals. Hopefully this video helped you a little bit when thinking about it. All right, guys, thanks for watching. Please give me a like and subscribe if you enjoy this type of content. We'll see you on the next video.